this is a trader investor. I'm going to do the broader market analysis, how it closed today, and we'll start off with SPY. So what's interesting is I removed this, so let me put it back on. The Fibonacci retracement from recent high to low. Yesterday we were at the 50% retracement, and I was expecting price not just to stall but to go back down because we've already taken care of most of the imbalance and so on. So that expectation was not there, and so today what price gave us was two areas of bull flag formation, actually three, but two of them were formed yesterday and a good part of today. So when price broke out of the 15-minute range, then let me just redraw this. So here's bull flag 1, bull flag 2, bull flag 3. When price broke out of the 15-minute range of today, I always talk about headwinds looking in the past. So it blew right through the 15-minute range low of Thursday of last week, and it blew through the mid-range, and then it formed a bull flag. Now here's where it gets a little bit tricky. The reason why I say it's tricky is because the 15-minute range high of Thursday, we'd never reached there. However, we went past through the mid-range and we pulled back, and knowing that this has been pushing up strongly, this bull flag was okay to take for a dollar move up from the highs of the bull flag. So if you draw your bull flag this way, at the break of this flag, a dollar move. That's was the expectation. And so if we look at this, it was a $1.40 move. Now the other part why I say this a little bit tricky, at 11 a.m. Pacific time, the Fed chairman Jerome Powell spoke, but the market, they did their thing last week Wednesday. When he gave the minutes, the markets already said, I'm going to take it down, take that news and just do whatever I want to do with it. And then today, whatever he said, it didn't matter because price has already course corrected that move down, and there was nothing else, no more surprises for the market, the big players. So we just follow what the big players do. And so once this speech is out and there was nothing that shook the market, then we can enter here to go long on a call position and exit at our dollar move for at least target 1. Target 2 is higher. So at the end of the day, you can say, oh well, I'm going to close everything out, I've already captured some gains and I don't want price to go further down. You can say that and exit all your positions. Because even at the end of the day, it was still a small gain because your entry was 422.50 area and we closed 423.05. So about 50 cents move from your entry. So delta 50, that's 25 cents. That's pretty good. On the rest of your positions, you've already captured your 50 cents on the delta 50 in half of your positions. So that's why I say it's a little tricky. Even though we didn't clear this bull flag on a strong move, the 70% retracement acting as a short-term resistance, but we never broke below it. Even if you look at the hourly chart, right, we came up, we made pin bar after pin bar after an indecision spinning top right at the 70% mark. We didn't break the low of the previous hour at 7:30 Pacific time. So this was a strong sign that, and this kept making higher lows. These three bars while price kept making higher highs. So this was again a pennant, strong sign that once price breaks, you have a good move up without having to worry about that 15-minute range high of Thursday, because price almost came to it and stalled, but did not stall long enough to pull back. You knew it was a strong move up, and then we went through the 78% retracement. We closed back down it. I'm expecting price to do this, but we don't trade expectation, we trade what we see. Sometimes you have expectations and you enter a position. When you enter a position outside of your parameters, based on some feelings and some hunches, make it a smaller size. That way you can exit quicker, or even if you don't want to exit that position, you can stay in the position, and the loss of the full options being lost is irrelevant because of your position size. If you, let's say you do 10 contracts normally, you can just do one of these, and you know a loss of 25 cents per contract is on 10 contracts is actually less than, let's say, one contract that costs you 125 or something like that. So that's why I say smaller size, you can take a chance and do it. I do this once in a while. I take those positions when I think that some event could drive price one way or another. I'm willing to accept that risk, because overall my consistency is playing out my strategy. But when I deviate from my strategy, smaller size, and I'm okay to deviate from my strategy. And I could be wrong 2-3 times in a row. It doesn't matter when I deviate from my strategy. So, but overall, looking at the broader markets, SPY, this is what it gave us today. It gave us a beautiful entry. Qs, very similar, but Qs cleared the high of last week. The high of last week was made on Thursday, cleared it, stayed there, and now did we have 346.93, let's say 347 to or 348. It gave us that dollar move. There was nothing stopping us. We could go more than $1, so this was another beautiful entry. IWM, my leading indicator. There was no entry for me at the break of the 15-minute range, because again there was no real strong. You see how in SPY it just kept driving up. There was short pullbacks, but it kept driving up. But in IWM, it drove up, strong pullback today, and it took a long time to reclaim the high of Monday, the high of yesterday. It took a time to reclaim it, and so there was really no entry in IWM. But what IWM is telling me as my leading indicator is if it starts to have strengths, I can feel comfortable in 15-minute range topside breaking of SPY or Qs, because IWM is also strong, my leading indicator. Diamonds today, strong move like SPY, followed by a short pullback. That's alright, but followed by a strong move. But when we broke out of the high of yesterday, price pulled back, stayed above the 15-minute range. Good entry. Did we have a dollar move? What I usually want to see is when I break this trend line, that's my entry, and do I have a dollar move to the next area of trouble? We've already cleared this, so this is what I want to come after. So if from here to my entry, somewhere here, $1.50. So that's why I did not trade Qs, but this is how you can look at, I did not trade diamonds. This is how you can look at it, because it has given you enough room, and boom, all you need is one of these four to work in your 20, 10, 20, 40, 30 contracts, depending on your risk appetite and your account size, and you don't need to have all four of them work. You just need one of them to work. So this is how the markets ended today. Did you make some green? Did you participate? Did you stay on the sideline, and why? Was there fear, or were you deviating from your strategy, or are you struggling to have a strategy? for any of those, if you leave me a comment, I will take time to respond to your comment and provide guidance where necessary to help you become a better chartist. Alright everyone, this is all for this video for now. I'll see you in the next one. Take care.